This group, conformed by Javier Ojeda, Alec Angel, Alejandro Barón, Lucas Montes, and myself, Gonzalo Ansede, presents the financial restatements review of CIE Automotive Anonymous Society, which is responsible for the supply and manufacture of automotive components in Spain. This review contains the balance sheet, the income statement, and a final executive review accompanied by all related notes, all in euros currency and expressed in thousand notation. The audit report was carried out by PwC Audit Company, and no comments were added on the annual report, since it is continuous on the annual accounts for the 2022 financial year. With this said, we present the financial statements review of the annual report of the fiscal year 2022 of CIE Automotive SA.
The first part we worked on was looking at CIE Automotive's total assets from the previous and actual year in the balance sheet. In the recent financial report of CIE Automotive, several key insights have occurred. Firstly, there has been an overall decrease of 1.2% in total assets, driven through reductions in both non-current and current assets. As we can see, intangible assets, especially goodwill and tangible assets like property, plant, and equipment, have experienced significant declines, with decreases of 20.3% and 18% respectively. Moreover, there is a minor decrease of 0.8% in non-current financial investments, largely driven by reduced investments in group companies and associates. In addition, current assets have seen a notable reduction of 7.9%, with inventories experiencing a significant decrease of 22.1%, while trade and other receivables experienced a moderate increase of 20.7%, and cash showed a slight increase of 0.8%. This analysis gives a complete look at how CIE Automotive's money situation changed over the last year, highlighting areas of both decline and growth. So overall, the company faces challenges in maintaining its asset base, especially in non-current assets, but has managed to balance certain current asset components. This mixed performance shows that there is a need to make some changes to improve financial stability and manage assets better in the future.
Total liabilities have increased by 0.7%, while non-current liabilities have seen a 6.2% increase, predominantly due to long-term payables. This has resulted in a total current liabilities decrease of 16.9%. Current debts have risen by 58%, mirroring an equivalent increase in current accruals. Additionally, trade payables have increased by 12.8%, and other payables have gone up by 12.2%. Based on the provided financial data, the company has experienced varied trends in its liabilities. Non-current liabilities have shown a notable increase, largely driven by long-term payables, suggesting a strategic accumulation of long-term debt. In contrast, total current liabilities have decreased significantly. There has been a sharp rise in both current debts and accruals, indicating a potential increase in short-term financial obligations. Furthermore, trade and other payables have also seen moderate increases. These shifts in liabilities reflects a complex financial landscape that the company must navigate, balance short-term obligations against its long-term financial strategy.
Now, if we analyze the income statement of CIE Automotive, we can see several information between the previous year and the actual year. The turnover has a 29.9% increase. The cost of goods sold, the COGs, has a 0.7% increase. The personal expenses has a 3.7% increase, while the salaries has a 3.8% increase, and the social taxes a 2.4% increase. While the operational expenses, the OPEX, has a minus 8.2% decrease. Now, the operating profit loss, or the EBIT, has a 39.8% increase, as well as the financial income and financial expenses, who has more than a 20% increase between the 2 years. The PBT, the profit or losses before taxes, we have a 30.4% increase. And now if we look at the corporate income tax or the CIT, we can see a very high percentage of decrease, a minus 228.5% decrease. And the profit or loss for the period or the net income has an 18.9% increase.
Let's head now to the conclusions of the project. CIE Automotive SA is an automotive company headquartered in Bilbao, Spain, that designs, manufactures and sells components and subassemblies. First of all, we talk about the balance. About the assets, the weight of non-current assets is very high, especially the non-current investments. Consequently, the current assets are low. Regarding the equity and liabilities, it stands out the high weight of non-current liabilities versus a low equity and low current liabilities. This situation impacts that the working capital is negative the 2 years. If we pass to the income statement, we detect that in 2022 exercise, CIE has increased their sales around 30% and the operating benefit increases even more. However, the financial expenses are high. That reduced 10 points the benefit. Finally, the net profit 2022 achieves a growth of 19% compared to 2021. And if we calculate some sectorial ratios compared to other companies in the sector, we appreciate. In liquidity rate, CIE shows good treasury ratio, but has to increase their working capital. About debt rate, CIE is excessively leveraged, so the company should try to reduce its debt levels. About asset management rate, CIE shows a high level of non-current assets for the level of sales generated. Regarding profitability rate, the ROE is okay, but the ROI is low. And about self-capacity financing rate, low performance in self-financing capacity on asset and good results in self-financing capacity on sales. As a conclusion, CIE shows good marks in the balance, income statement and ratio analysis with a remarkable growth during 2022. But it's necessary to watch and monitor some balance indicators in order to increase its financial strength and be a top supplier for most of the brands in the automotive industry. Thank you all for watching and have a good day.